I think the upside case for ETH is actually higher than, let's say, Bitcoin did 100x. Could Ethereum do 100x? I think that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well in terms of network value. So then if someone thinks Bitcoin's at $1 million, then imagine what it means for Ethereum, because it is not just Wall Street financializing onto blockchain, but of course, there is going to be a lot happening between now and year end, including other Ethereum treasuries starting to buy Ethereum plus Bitcoin goes up. So Ethereum's price is not going to be based on the contemporaneous transactions recorded in any single week, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH.
Last week, Ethereum made headlines as it finally broke past the $4,000 mark, a milestone that crypto investors had been waiting for. Prices swung sharply as some traders were forced into liquidations, while others bet on rival blockchains gaining ground. But Tom Lee points out, these short-term jolts aren't really about Ethereum's fundamentals. They're about market mechanics, forced selling, leveraged bets, and the usual tug-of-war we see when an asset approaches such a huge barrier. The bigger picture looks very different, though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Many experts say $5,000 isn't just possible, it's realistic, especially since Ethereum already brushed $4,000 last December. The renewed momentum isn't just hype. On-chain data shows transaction volumes and active addresses hitting all-time highs. Developers are pushing network upgrades, the community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. Differing from Bitcoin, Ethereum offers something regulators actually want to harness: smart contracts that power decentralized applications and digital finance ecosystems. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out in a recent interview on crypto, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
MicroStrategy wants to get to at least 1 million Bitcoin, which is about 5%. And keep in mind that once MicroStrategy has 1 million Bitcoin, they have a sovereign put. They are strategically important to the Bitcoin ecosystem. I mean, if the US wants to create a strategic Bitcoin reserve, it's probably difficult for the US to buy 1 million Bitcoin in the open market, because as soon as they announce it, sellers are going to shrink and, Bitcoin could go to $1 million right away. So MicroStrategy might be an easier way for someone to get to 1 million Bitcoin. So I call that a sovereign put. MicroStrategy's achieved the 3% in 5 years. So they were buying basically 16 cents worth of Bitcoin a day, every day for the last 5 years. Bitmine if you look at it from inception to now, has added about 80 cents to $1 per day in Ethereum. So it's about 12 times faster than MicroStrategy. So we would be on a path to get to 5%, presumably like at 12 times the speed of MicroStrategy. But it makes sense because, we would be a benevolent entity in the sense that we are doing everything 100% compliant with what is the idea of a legally compliant. Ethereum is a legally compliant blockchain, and everything that Bitmine is doing is keeping every single piece of the operations in the United States. So it is very compliant to what Wall Street and the US government would want to see in someone who's staking a lot of ETH. And equally important, ETH itself is going to be really where so much of Wall Street financializes on the blockchain. So eventually, I think someone on Twitter made the point that staking ETH for Wall Street is like gamers buying NVIDIA, that you would have done better to buy NVIDIA as well as be a gamer or be a gaming company. It is actually that exact idea that Wall Street is, if they're going to be tokenizing real world assets from money markets to dollars to stocks, that they're going to want to own ETH itself, but then they want whoever's staking it to actually be an entity that is really trying to further the goals of Ethereum. So I think we really serve an important purpose by staking ETH. Genius Act, SEC wants to move the financial system onto the blockchain. And Ethereum is the largest blockchain, but it's also compliant with US laws. It's a legally recognized blockchain. But this blockchain, of course, can be used by other countries and other, nations. The US obviously wants to strengthen the US position and dominance on this blockchain. And of course, keep in mind that there's not just one storyline here coming onto Ethereum, it's also AI, right? If you're going to tokenize, whether it's robots or other things, you want a blockchain that also, again, can be secured. So tech and Wall Street are converging onto Ethereum. Does Goldman Sachs and JP Morgan want Ethereum to be held in like millions of different wallets? Not that they're trying to centralize it, but they want to make sure that the staking is done in a compliant way. And not everybody is going to choose to do that. But that's what we said from the beginning, that the idea is that BitMine has a pristine balance sheet, super clean, no exotic capital structure, and everything that is being done. And we haven't announced our staking solution, but we're taking our time because, first of all, $3 billion of ETH, it's a big decision, but it's also going to be completely compliant with GAAP and actually how the US would want that to be staked. So I think it's a very thoughtful approach we're taking. But yes, everything you just said, like, let's say, because I don't disagree, and it just shows you Ethereum treasury companies are critical infrastructure. It's not just a treasury play. And in exchange for that, you're earning a staking yield at a minimum, but they could be earning other ways of generating income. So I think you're highlighting that these Ethereum treasuries aren't just like an alternative to an ETH ETF. They are playing a really important role in the ecosystem. In the short term, where fair value for Ethereum does not play into what ETH does short term. Look at it. Last week, it got to 3,300 on because there are folks who have liquidation levels, or they're doing pair trades, or people think Ethereum's a dead chain, so they're betting on another chain and trying to force levels of liquidation. I think that that's the dynamic near term, but wasn't that Bitcoin at $1,000 in 2017? Actually, if people go back to 2017, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH. Bitcoin was 1,000 in the early part of 2017, and it was until August, and then it went straight up.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Like what is resonant about Ether, the asset, and the treasury company model over something like Bitcoin or any other alternative treasury company?
Well, first, I'm a big fan of Bitcoin. I think Bitcoin is the way, and our work on the FundStrat side shows Bitcoin can get to the $1.5 million per coin. So Bitcoin still has a huge story ahead. Yeah, but Bitcoin and Ethereum operate on different parts of how the world is financializing. And that's a principal difference to me, because Ethereum represents the world financializing onto the blockchain, which is not Bitcoin's goal, and the AI world, creating basically a digitally native way to bridge the real world and digital security. So that's, to me, why someone wants to own Ethereum treasuries, because I would buy MicroStrategy if I was looking at this. And by the way, it is a granny shot in the FundStrat ETF. But the reason is that MicroStrategy is growing your Bitcoin holdings every day. So you're going to outperform Bitcoin. Ethereum treasuries are really the only way for a US equity investor to get exposure to Ethereum, unless they're buying ETH directly or an ETH ETF. But if you're an institution and this is one of the biggest themes, I don't think they're going to just say, well, in my fund, my $50 billion large cap fund, Ethereum's the biggest trade, so I'll buy JP Morgan. They might, but they're better off saying, how can I be directly exposed to Ethereum? And they can't really buy an Ethereum ETF because that's not within the parameters of their fund. So I think, to me, the US equity market professional investor looks at Ethereum treasuries as really the only way to get exposure to ETH as a macro trade. We noticed Bitcoin, because I was at J Morgan, was like $100 when I left in 2014, and we talked about it in 2012, and then suddenly it was like $1,000. I was like, whoa, it's $100 billion. I've never seen anything go to $100 billion that didn't have something behind it. So at FundStrat, we spent several months trying to understand Bitcoin, and I never fully understood it, but I found that it was driven by two explainable things. One is that it was 97% of that move of Bitcoin from 100 to 1,000 was the number of wallets and the activity per wallet. I mean, basically network value effect. And we could simply say, in the next couple of years, if more people use Bitcoin, it's going to go up exponentially again. So we thought it would reach, by 2022, 25,000, but it could even go to 100,000 if it got to 5 to 10% of the value of gold. So we started to really push that story as Wall Street needs to understand Bitcoin because it's digital gold. And you're right, Ryan, maybe other people said it, but we were really the first Wall Street firm to push it to the institutional universe. And remember, 0% of institutions had ownership of Bitcoin. It was 100% retail. And as you know, in the last 8 years, Bitcoin has the biggest narrative is it's digital gold. It's a store of value. Of course, it's a great payment system, everything else. But really what's resonated is that there's a group of people that own gold. And we did studies back then to show gold was primarily owned by baby boomers. So millennials would own Bitcoin the way boomers owned gold. So it was a generational story on top of a digital substitution story. That's the sort of the backstory. And I did many webinars. Actually at FundStrat, believe it or not, we got fired from our institutional clients. We actually had a decline in paying clients at FundStrat because they thought we completely lost our mind. And you're saying it's a legitimate asset class. And so our reputation was actually harmed. But as you know, Bitcoin now is 120,000. So it was 120x. Our clients that invested it and followed us, because we recommended 1% to 2%, for some, it became 100% of their portfolio. I think that's happening with Ethereum today, because Ethereum's been kind of a dormant chain. People wanted faster networks, or more novel ways to do essentially validation. But Ethereum's had zero downtime. That is what matters to Wall Street. Zero downtime in 10 years. So I think that Wall Street has already decided Ethereum is the chain they're going to build Wall Street onto. And it's lower than it was 5 years ago. We know on-chain activity has surged to all-time highs, right? So Ethereum the community has been re-galvanized because the price, of course, has recovered, but also more people are using Ethereum. And then it's very obvious that the Genius Act really benefits a smart contract blockchain, as much as it benefits Bitcoin, but Bitcoin, won't host a stablecoin. Do I think that the fact that Ethereum is not at 15,000 today is a bad sign? I've seen this before. I mean, we've recommended Tesla and we've recommended NVIDIA, and it's a granny shot since 2019 in Fundstrat Capital's ETF, and it's been part of the research portfolio for a long time. It has not tracked revenues. It has moved in step functions. And I think Ethereum, look, I'd love to see it stay here for 5 years, because that means we can acquire it at a much more attractive price. I mean, if it is at 17,000, that's much more expensive for the Ethereum treasuries to acquire Ethereum. Of course, their stock prices will benefit, but to me, it's actually great that it's actually here.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.